Hey everyone, welcome back to the channel. So I've got to be honest with you. I woke up this morning and saw something that caught me completely off guard. The crypto market has taken quite a turn, and I know many of you are probably looking at your portfolios right now wondering what on earth is happening. Let's dive right into it. The Fear and Greed Index has dropped to 27. We're officially in fear territory now. And honestly, the numbers are pretty sobering. We're looking at a market cap that's down another 3.6%, sitting at $3.47 trillion. That's a significant drop, and it's all being led by Bitcoin's performance over the last 24 hours. Here's what we're seeing across the board. Bitcoin has fallen about 3%. Ethereum is down almost 5%. And XRP? Well, XRP has taken an even bigger hit at just over 5%, about 5.18% to be exact. When you scan across the market, it's a sea of red almost everywhere you look. Now, there are a couple of bright spots if you look closely. Internet Computer Protocol, ICP, is actually up today, which is interesting. If you check out ICP's daily chart, you can see it's actually rolling pretty well, while most other cryptocurrencies in the space are struggling. But here's the thing, and this is why I love following crypto Twitter. There are some really insightful analysts sharing their thoughts on what this all means. One perspective that really caught my attention comes from Credible Crypto. He's playing devil's advocate here, and his take is fascinating. He says that even if this is the market top, which he doesn't believe it is, we haven't actually seen that greed-filled euphoria stage yet. You know, that moment when everyone and their grandmother is buying crypto and telling you to sell everything. He's been consistent since 2020, saying he believes we'll see at least a $10 trillion total market cap before this cycle ends. And you know what? He's sticking to that prediction. Let me show you what the total crypto market looks like right now. When you pull back and look at the bigger picture, we're down quite significantly. On the daily chart, and especially over the last 2 days, we're seeing this downward movement happening on high volume, which is never a great sign. But here's something interesting. We're still trying to hold some key levels. We're attempting to bounce off what used to be resistance levels from way back in May and June of 2025. The big question is, can we stay above these crucial support levels? I'll be honest with you, it's not looking great right now. Now, there's been some interesting speculation floating around about what might be causing this downturn. Some people are pointing to alleged issues between Wintermute and Binance. There's this theory being discussed, and I want to be clear that this is just speculation, that suggests some coordinated activity between these two entities. The claim is that in just the past 30 days, $34.5 billion was traded between them. The theory goes that Binance allegedly sends chunks of cryptocurrency. We're talking $10 to $100 million at a time, to Wintermute wallets before major market dumps. Then Wintermute supposedly market sells back on Binance, which triggers a cascade of liquidations. Now, I looked into this pretty thoroughly, and I've got to tell you, I don't see any substantial evidence to back this up. In fact, the Wintermute CEO has come out and directly denied rumors that his firm plans to sue Binance over losses connected to that major market crash we saw on October 10th. You remember that day, right? It was when Bitcoin took that dramatic plunge from $121,500 all the way down below $103,000. That happened right after President Trump made that tariff announcement, and it really shook the market. So, where does this leave us? Well, that's what we're going to explore in the rest of this video. Make sure you're subscribed because we're going to keep tracking these developments closely. The crypto market is nothing if not unpredictable, and I want to make sure you're getting the most up-to-date analysis. Now, here's where things get really interesting. The former Binance CEO, Changpeng Zhao, actually stepped in to address all this speculation. He urged everyone to stick to verified sources only, especially since several influencers were amplifying these false claims without doing their homework. And get this, the Wintermute CEO himself, Evgeny Gavrillo, came out on Twitter to set the record straight. He was pretty direct about it, too. He said, and I'm paraphrasing here, "We never planned to sue Binance, and we don't see any reason to do so in the future." He even called out the people spreading this misinformation.
So honestly, I think this whole lawsuit rumor is just noise. It feels like another attempt to shake out weak hands and create unnecessary panic in the market. Let's shift our focus to what really matters: Bitcoin itself. Because at the end of the day, Bitcoin is the monster that drives this entire market. And when Bitcoin moves, everything else follows. Looking at Bitcoin on the hourly chart, we can see it hit a low of around $103,500 earlier today. But here's the good news. It's already bounced back up to $104,500. That's a solid $1,000 recovery in just the last couple of hours, which shows there's definitely buying interest at these levels. You can actually see the volume picking up as traders are stepping in to scoop up Bitcoin at what they see as a discount. The question is, what can we learn from this price action? When we zoom out to the daily chart, here's what I'm seeing. We're still holding these crucial support levels, but I'll be honest, we're getting pretty close to some danger zones. However, some analysts are saying that even if we drop to $98,000, we'd still be in healthy correction territory. And you know what? There's this idea gaining traction that we're in a prolonged cryptocurrency cycle. Now, I'm not sure if people are saying this because they genuinely believe it, or if they just don't want to admit we might be entering bear market territory. It's worth considering both perspectives. Here's something that might put things in perspective. If Bitcoin corrects down to about 22.25% from its peak, that would actually be completely normal for bull market corrections. We've seen this pattern before in previous cycles. A 20% correction would bring us down to around $98,000 per Bitcoin. The good news? As of right now, we're only down about 18% from our all-time high. So we're still within that normal correction range. Now, I want to share something really fascinating that Cryptozium pointed out about Bitcoin cycle tops. He mentioned that there are many ways to spot when a cycle is reaching its peak. You've got technical indicators, market sentiment, and macro-level factors all playing a role. But here's the kicker. One of the clearest historical signals he mentioned is the ISM Composite PMI. Sounds technical, right? But it's actually pretty straightforward. Historically, Bitcoin tops have aligned with the ISM peaking and then rolling into contraction territory. Now here's where it gets really interesting, and this might be the most important point of this entire video. Despite Bitcoin recently hitting around $107,000 at its all-time high, the ISM is actually sitting at cycle lows right now. And get this, it looks like it's about to re-expand. This is huge because it goes against the typical pattern we've seen at previous cycle tops. Usually, when Bitcoin peaks, we see economic indicators starting to contract, but right now, we're seeing the opposite. Now here's where things get really interesting, and this might change everything we think we know about market timing. Looking at where we are with this ISM indicator, it appears we could be looking at expansion over the next few months. Hardy actually retweeted a clip from British investor Raoul Pal that's absolutely worth your attention.
Why is Bitcoin sort of not wildly off to the races yet? And it's this chart. Bitcoin is basically, this is a detrended Bitcoin, and it's basically the ISM, which is the business cycle. Remember, we've always said it's the business cycle stupid. It is always the business cycle stupid. And all of these people who claim it's the 4-year cycle based around this and that, they don't understand the fundamental of what the business cycle is, why there's a 4-year cycle in everything. And we've explained it. And we'll go through it in great detail tomorrow in our Everything Code presentation. But basically, it's following the ISM. And rates have been following the same pattern. You see, rates should have come lower. They need to come lower because we need to roll the debt. We've talked about this. That's part of the Everything Code, fundamental part. And ISM, because rates are so high, has meant that Main Street has been screwed while Wall Street's made money from debasement. Earnings versus scarce assets. This is the issue that they need to solve, and they need to get rates lower. They get rates lower. Why? Why do we have an elongated business cycle that looks like virtually no other other time? It's because, and I only just found this out redoing the work on the Everything Code recently, is that in 2021-22, they actually extended the maturity of the debt from 4 years to 5 years. So that extension of the maturity of debt has pushed out the business cycle a year. The 4-year cycle this time around is a 5-year cycle. We don't know what the next one will be until we see where they all end up getting refinanced, whether it comes back to 4 because they managed to get some stuff at the long end, or whether they shorten it because everything's in the short end. We don't know yet. But this one is a 5-year cycle. And this is what it looks like. A 5.4-year sine curve. 5.4 years is the exact average weighted maturity of the debt. And it tells us the ISM should peak by 2026. We think liquidity probably peaks before that, as the rate of change of ISM changes and the rate of change of liquidity changes. Our best guess remains well into 2026, probably Q2.
Did you catch that? Raoul Pal is saying the ISM should peak into 2026. This is massive, because if he's right, this could actually fuel a much larger cycle than anyone's currently expecting. Now, for those of you wondering what ISM actually is, and don't worry, I had to look this up myself when I first started. ISM can refer to a couple of things. Most importantly for us, it's the Institute for Supply Management's economic reports, specifically the Purchasing Management Index, or PMI. Think of it as a health check for the entire economy. There's also the international securities market, but that's more about debt securities through the London Stock Exchange. The bottom line? This indicator measures market health. And I'll drop some links in the description if you want to dive deeper into the technical details. So here's the million-dollar question. If Raoul Pal is right about this timeline extension, could we be looking at a cycle top in 2026? It's definitely possible, and honestly, that would give us a lot more runway than most people are expecting. We've still got the rest of Q4 to see how this plays out, but this is definitely something to keep on your radar. Now, let's talk about XRP for a minute. Looking at the chart, you can see it took quite a hit, along with everything else. And I bet some of you are looking at your portfolios right now thinking, why didn't I take some profits a few months ago? Hey, we've all been there. Maybe you're kicking yourself, or maybe you're a long-term holder who doesn't sweat these short-term moves. Everyone's got their own strategy, and that's totally fine. But here's what I'm seeing with XRP that's actually pretty encouraging. It's holding up surprisingly well. We're bouncing off what used to be a support level, and it looks like we might be forming a double bottom pattern. If that plays out, we could see a nice bounce back to the upside once all this market uncertainty settles down. Before we wrap up, I want to give a shout out to all the analysts who've been sharing these insights: Cryptosium, Hardy, Raoul Pal, Butcher, and Credible Crypto. When markets get crazy like this, it can be really tough to make sense of what's happening. And these different perspectives help us see the bigger picture. But remember, Bitcoin is still the leader here. We're still in what Jungle Inc. calls spec territory, and they've pointed out something pretty significant about institutional behavior. Here's what's happening behind the scenes. For the first time in 7 months, institutional demand for Bitcoin has actually fallen below the rate at which new coins are being mined. That means the big players, the institutions we all watch so closely, are pulling back. This creates a few dynamics worth understanding. Cautious sentiment is the name of the game right now. These institutional investors are reportedly sitting on the sidelines, waiting for confirmation that we've actually hit bottom before they jump back in. Profit-taking is also playing a role. Some analysts are noticing that crypto wallets that have been dormant for a long time are suddenly moving coins. This suggests long-term holders are finally cashing out and taking profits, which obviously adds downward pressure. And then there's the altcoin situation. Look, I know many of you are holding altcoins hoping they'll skyrocket, but I've got to be honest, we might be entering a period where altcoins become less and less relevant. It's not what we want to hear, but it's what the data is showing. An index tracking the bottom 50 of the largest 100 digital assets fell as much as 8.8% recently, and it's down 60% for the year. That's not great. Now, if you're feeling scared right now, and that's totally understandable, Ash Crypto shared something that might give you some perspective. Remember the first few days of November 2024? Bitcoin dumped from $71,000 down to $66,000, and everyone was saying the market was completely done. Sound familiar? I'll link all these sources in the description so you can do your own research. But here's my take. Markets are cyclical. Fear is temporary. But good projects with solid fundamentals tend to survive these storms. And here's the kicker. Bitcoin then pumped 60% from $66,000 all the way to $108,000 in just 45 days. Let that sink in for a moment. 45 days. So if we really are in this elongated cycle that everyone's talking about, we could see Bitcoin explode upward out of absolutely nowhere. And it could happen incredibly fast.
Look, I keep coming back to these support levels we're watching. Even if we drop to $98,000, that's still only a 22% correction for Bitcoin. And honestly, we've seen these types of corrections so many times before in previous cycles. It's almost routine at this point. Ash Crypto gives us another perfect example. From November 4th to December 15th, 2024, Ethereum pumped 75%. Again, that shows us the market only needs about 45 days to deliver those explosive parabolic returns that we all dream about. And here's what's really interesting. We're still at the beginning of November right now. Today, we're in almost the exact same spot. November just started. We're seeing this dump, but when you look at the underlying data, it's actually incredibly positive. Let me walk you through what Ash Crypto is seeing. The Fed is going to cut rates in December. Quantitative tightening stops on December 1st. That's massive liquidity coming into the market. We're moving into quantitative easing territory, with the Fed buying treasury bills again. The crypto market bill is getting closer to passing. US-China trade deals are being signed. Gold has topped out, and US stocks are hitting new highs. With all of this happening, Ash Crypto is staying bullish. His take? Crypto prices are being manipulated and suppressed right now. He doesn't buy into the idea that when literally everything else in the world is pumping with all this liquidity, crypto is somehow done for. His strategy? He's holding and waiting patiently. And he admits it's definitely not easy. But as he puts it, we all knew the risks before we started investing in this fun stuff called internet money. I think that's a pretty grounded perspective, honestly. Now, switching gears for a moment, I want to talk about something really exciting happening with Ripple. Their RLUSD stablecoin just hit a major milestone. Ripple's stablecoin tracker posted that 50 million new RLUSD was just minted at the RLUSD treasury. And when you look at the stablecoin market cap rankings, this is pretty impressive. Obviously, Tether and USDC are still dominating the top two spots. But check this out. Ripple's RLUSD is now sitting strong at number 7 with over $1 billion in market cap. That's a brand new milestone for RLUSD. Why does this matter? I think this really shows us where real-world utility is eventually going to take this entire ecosystem. The XRP ledger is going to be used in much more meaningful ways, and that creates a pretty simple equation.
more utility means more demand for XRP, and more demand eventually means higher prices. Now, it might be a slow grind. It might be one of those things that happens gradually over time, rather than explosive overnight gains. But the foundation is being built right now, and that's what we need to keep our eyes on. Speaking of real-world adoption, Chad Steingraber commented on something huge: the APSA partnership with Ripple. We're talking about one of Africa's largest banks with over $2.1 trillion in assets, adopting Ripple's custody technology. We actually talked about this recently, but there's a new article that just came out. Reese Merrick posted this yesterday, and it's a fascinating read about APSA's strategic leap into digital asset custody and what this signals for Pan-African finance. This was a conversation with Rob Downs, who's APSA Group's head of digital assets, about their digital asset custody partnership with Ripple. This move positions APSA as the first major African bank to adopt Ripple's institutional-grade custody technology. Think about the implications here. We're not just talking about crypto adoption. We're talking about major financial institutions with trillions in assets choosing Ripple's technology as their gateway into digital assets. That's not speculation anymore. That's real-world institutional adoption happening right now. And here's what makes this partnership even more interesting. APSA isn't just licensing Ripple's software and calling it a day. Rob Downs stressed that APSA will actually operate the infrastructure themselves. As he put it, we'll be providing the security and holding the assets. Ripple's technology runs through APSA's ecosystem and our own technology stack.
This approach was driven by cybersecurity and trust concerns, which honestly makes a lot of sense. A PSA has been protecting clients' assets for over a century, and they have incredibly capable cybersecurity teams. They're taking full responsibility for the security side of things, while leveraging Ripple's proven technology. What's really impressive is that this partnership didn't happen overnight. APSA went through a 2-year evaluation process, issued multiple RFPs, and compared global providers before choosing Ripple's custody arm. And here's the kicker. They cited Ripple's on-the-ground African presence as a key differentiator. That local presence and understanding of regional markets really mattered. Now, here's where it gets exciting for the broader adoption story. This isn't going to be a one-and-done launch. The custody service will first launch in South Africa, but there are plans to extend to other APSA markets over time. We're hearing rumors that it's going to launch in Nigeria, Kenya, and Mauritius. The bank is looking to roll these services out sooner rather than later. And you know what this really represents? A changing perspective among traditional bankers. These financial institutions are finally realizing that digital assets are the future. We hear this narrative mostly in the United States and Europe, but guys, this is becoming bigger and bigger around the world. It's worth noting that Reese Merrick, who wrote this analysis, is also responsible for Ripple's Middle Eastern region and is located in Dubai. So we're seeing this global expansion happening across multiple continents simultaneously. Here we go, everyone. This is real-world utility in action. We're seeing Ripple's RLUSD surpass $1 billion in market cap, hitting that brand new milestone, while major African banks are choosing Ripple's technology for their digital asset infrastructure. And you know what? While the market is just kind of chilling out right now, taking a breather, I think all of these developments point to something bigger. Combined with all those macro factors we discussed earlier, I really think we could be on track for that elongated cycle everyone's talking about. The foundation is being built right now, piece by piece, partnership by partnership. What do you think? Are you seeing these institutional partnerships as the building blocks for the next major bull run? Or are you more focused on the short-term price action? Drop your thoughts in the comments below. I genuinely want to hear your perspective on where this is all heading.